All right, so this is lesson 1. Today we're going to talk to you about how you can boost your credit score fast. So this is lesson 1 of workshop 2, mastering your finances and how to get mortgage ready. And my name is Marc Giles. I'm a mortgage loan originator as well as a licensed real estate agent. So if you have any questions anytime, I've been doing this over 20 years and I've got all the information about everything you want to know about buying a house, financing a house, selling a house. Feel free to comment below. I'd love to hear what you have to say. Like the video and please subscribe because we need to keep these videos coming. Once a week, we're going to have a brand new video for you and how you can get mortgage ready to buy your house. So you can have everything done. You can have your money saved for your down payment. You can have your house picked out. You can have been pre-qualified, everything done for your loan. But I tell you what, if your credit score isn't in the right place, the door to home ownership will not be open for you. But here's the good news. The good news is you can fix your credit score. It's a temporary situation that we're all afflicted by at some point or the other. It's man-made and it's absolutely maneuverable. So in this video, I'm going to show you numerous ways in which you can fix your credit score relatively fast so that you can help yourself qualify for a mortgage loan, car loan, or anything else you want to do. So let's get into it. Now, before we get started, in our next video, I'm going to show you how lenders look at your credit score and how they determine what interest rates you qualify for, what loan programs you qualify for. But right now, let's talk to you about how we're going to get your credit score where you want it to be. Okay, so your credit score is like a digital footprint or a fingerprint. It follows you everywhere you go. No matter what lender you're going to, no matter what you're trying to buy, you might need credit, especially when you're buying these larger items. So lenders, banks, insurers use this score to determine how risky you are a person that they can lend to. The real kicker though is the credit score that you have can not only get you a loan today, but if you have a higher credit score, it can actually save you tens of thousands of dollars over the lifetime of a loan. And if your mortgage loan is 30 years, just imagine how much money you'll save over that 30-year period just by having a higher credit score today. If I didn't say it already, this is part 1, why your credit score matters. Let's get into it. I've seen clients change their credit scores from 580 up to 620, and sometimes I've seen people change their scores from 520 to up to 600, and other times we're seeing clients change their credit scores all the way from 520 up to 720. Now, everybody's different. Everybody has a unique fingerprint when it comes to what you're doing with your credit. So all of these results are going to vary depending on your situation and what you need to do. So some people can get the credit score high fast. It might take a few more months, where others can spend 30 days to 60 days and get their score up. Over the last 20 years, as a mortgage loan originator, I've helped countless amount of people improve their credit scores just by sitting down with them at no charge, reviewing the credit report, looking at why the credit score is the way it is, and what is it about your credit report that is causing your credit scores to be low, and what can we do to your credit profile to make your credit scores go higher. It's a simple conversation, requires about 15 to 20 minutes of analysis, and sometimes we can just point out a few things that you can do so that you can improve your credit score. And like I said, once you get that score up, that could save you thousands and thousands of dollars over the life of the loan. Not only will it absolutely get you the mortgage that you're applying for, but it could additionally save you a lot of money over a long period of time. Part 3 is going to be really good. We're going to talk about things that you shouldn't do. But let's jump into part 2 right now and talk about the quick credit wins that you can accomplish. Number 1, you want to dispute any errors on your credit report. There's a lot of reports out here that tell us from people who have done studies of people's credit reports that on many of our credit reports are mistakes. And if there's any mistakes on your credit report that you can contact the bureaus and have them removed, you know what? That's going to give you a favorable impact against your credit score. In fact, there have been studies that show that 1 in 5 credit reports have mistakes on them. So there's a likely chance that you might have some mistakes on your credit report. And it's good for you to keep up with it and keep track of those mistakes and make sure that they disappear. Number 2, what you want to do is pay down revolving debt. That's right. What does that mean? A revolving debt is a credit card that revolves. What that means is a credit card, you can borrow $100 on it in January, pay the whole thing off, and then you can borrow another $100 in February. That's called a revolving account. Why? Because it goes up and it goes down. So what you want to do is you want to keep your balances low. So let's assume that they're going to allow you to borrow $1,000 on this credit card. You want to keep your balances under 30%. So in that scenario, if you are able to borrow $1,000, you would want to borrow less than $300. Now, if you notice that you have borrowed a lot more than $300 when your maximum borrow amount was $1,000, then you're going to notice that as you pay down those debts to below $300, you're going to notice a bump in your credit score. A third quick credit win is to ask for an increase in your borrowing amount. So once again, using that same scenario, if your creditor will allow you to borrow $1,000 on your credit card, if you don't have the money to pay it down to $300, maybe you can call your creditor and ask them to increase the amount you can borrow. So let's say you owe $500 and the maximum you can borrow is $1,000. That means that you're utilizing 50% of your credit. So if your creditor allows you to increase your borrowing amount, the total you can borrow, to $2,000, now if you keep it at $500, now your credit utilization will only be 25% of the amount that you can borrow. And that will cause your credit score to do what? Go up. That's right. So we're in the process of showing you how you can improve your credit scores. So let's go on to number 3. One other thing I want to point out to you when you're asking for them to increase the amount that you can borrow, make sure you ask them to not give you a hard inquiry when they investigate whether or not they can increase the amount you can borrow. You do not want another hard inquiry on your credit report. So what you want to do is you want to increase the amount that they will allow you to borrow without getting a hard inquiry on your credit report. What is a hard inquiry? A hard inquiry is when the creditor actually runs a full credit report on your credit. It comes up showing that you are applying for more credit. And if we don't have to have that there, it's better. It's not going to kill you. But when you ask for the credit increase, please request that they do not give you a hard inquiry. They can give you what they call a soft inquiry. Therefore, you will not have it reflected that you are applying for more credit, because you're not. You're just asking for an increase. Quick credit win number 4. What you want to do here is you want to make micropayments throughout the month. What does that mean? That means if your minimum payment is $29, but let's say you have a few more dollars to pay throughout the month, instead of just paying the $29 and waiting till next month, maybe you can pay the $29 and then a few days later you can pay another $20, then a few days later pay another $10. It helps. Every little bit helps. Those are micropayments. Okay, for our 5th credit win, what we want to do here is we want to make sure that we keep our old accounts open. So you have some credit cards that you've had for many years. Maybe back when you were in college, you still have that credit card open and they're only allowing you to borrow $200 or $300. You know, you might not even use it that often, but you want to keep it open. Why? Because history matters. The longer that you can demonstrate that you've been borrowing money and paying it back, that's called your credit history. And the person who has a longer credit history will have a higher impact on the score than those who have a shorter credit history. So keep your old accounts open. Sometimes if you don't use an account for a very, very long time, the creditor will shut it down. So if you have a very old credit card and you think it's been that long where they might shut it down, what you want to do is buy a little something on it and pay it off. Give them a little activity to show them that you care too. So in this video, I'm giving you everything that I give to my clients when we're having our one-on-one discussions about how to keep the credit good and how to make your scores go up over time. Because just because you got pre-approved for a mortgage does not mean that if your credit score drops that you will no longer be approved. That's right. So be very aware that even though you got a pre-approval letter, that you need to keep your credit scores just as high as they were when you got the pre-approval. High or higher. All right, let's get into part 3 of how to boost your credit score fast. Now I'm going to give you 4 things that I recommend that you not do when you're planning to buy a house, because you want to keep your credit score what? Super high. All right, let's get into it. So let's keep you out of the danger zone. So here's the things you do not want to do when you're prepping to buy a house. Number 1, do not open any new credit. Do not go out and buy a new car. Do not apply for any other credit unless you talk to your mortgage loan originator. I've been a mortgage loan originator for about 25 years, and one of the things that most disturbs me to find out that somebody went out and bought a new car. Not only did they buy a new car, but they didn't even buy it for themselves. What did they do? They co-signed. they co-signed for somebody else's car. Don't do that, right? So that's two things you want to do. One, now I know there are certain urgent circumstances. If you had a car accident, your car got totaled, you have to have a car and go to work, that's fine. But you're going to call your mortgage loan originator and you're going to say, hey, I'm going to buy a new car. Why? Because my car that I was driving got mashed up and I've got to get to work every day. If I don't get to work, I won't have a job and I won't be able to buy a house anyway. Now, if you do that, then you can collaborate with the mortgage loan originator so that you can make sure that you're still on track to buy this new house, even though you're buying a new car. Or if there's going to be a problem, you'll know it up front. But we do not like surprises, okay? The third thing that you absolutely do not want to do, you do not want to rack up a bunch of new purchases. So here you are, you know you're going to get this new house, it's coming up and you're all excited. So you're going to want to go window shopping, right? New furniture, new beds, new colors, you want it all. So you might even have to buy new appliances. Window shopping is nothing wrong with that. But the problem is, while you're out window shopping, you're going to bump into different salespeople and you're going to see that there's a 2-for-1 sale, buy one, get one. All of these great sales are going on and you're going to feel like you're missing out. And what do you start doing? You take out your credit card, you start buying furniture. Don't do that. Do not do that. Why? Because it's going to rack up all of these debts. And as a mortgage loan originator, we have to take that into account on your application. And if you're running up debts on your credit card, as we said earlier, your utilization scores are going to start impacting your credit score. Yes, that will cause your credit score to go down. We don't like low scores and neither do you. Why? Because it's going to cost you a lot of money over time. So don't go shopping running up debt. It's enticing. I get it, but don't do it. If you have to buy something, once again, call your mortgage loan originator and say, hey, I really would love to catch this sale. What do I do? And they'll let you know, don't do it. There'll be plenty of more sales after you get the keys to your new home. The fourth thing I ask you not to do while you are in the process of seeking to buy your new home, whether you're pre-approved, getting pre-approved, already pre-approved, and still shopping, do not miss a single payment on your credit cards. Do not miss a car payment. If you own a house and you're buying a second house, maybe an investment property or a second home, do not miss your mortgage payment. That is a fatal flaw. That's a deal killer right there. Do not miss a mortgage payment on your house ever. All right, even after you buy the house, don't miss a mortgage payment. Life kicks in, but I'm just saying, in the terms of keeping your credit scores high, you do not want to miss a mortgage payment. All right, so we're still in lesson 1, and I want to point out to you, in our next lesson, we're going to break down for you how much you can afford, how lenders determine how much you can afford, and then I'm going to show you how you can strengthen your file before the lender even looks at it. So this is part 4, your action plan. This is where you are going to go into action. So we've talked about all of the different things you need to think about. You might have to review the video as you're going through your action plan. But the first thing I want you to do is download the checklist. It's a free checklist. Just download it because it's going to give you the opportunity to check all the boxes and make sure that you're doing all of the things that you need to do to boost your credit score. Now, after you download that checklist, what you're going to do is you're going to go to the annualcreditreport.com and you're going to download a free copy of your credit report. That's right, you deserve to have a free copy. Now, a lot of us are monitoring our credit reports, and I recommend that you do that as well. Why? Because it gives you timely information. If sometimes you can tell the credit monitor system to let you know if somebody's tampering with your credit, last thing you want to have is your credit gets stolen. We don't want that. So what we want you to do is monitor your credit, get a copy of your freecreditreport.com, and we're going to start analyzing the credit so you can understand how these credit bureaus are looking at you. And real quick, let's talk about these credit bureaus. There are 3 credit bureaus. There's TransUnion, there's Experian, and then there's Equifax. In the credit report analysis sheet, I'm going to give you a copy of their websites as well as their phone numbers. If you need to, you can call all 3 of these bureaus and you can dispute items that are on your credit report, as we said earlier. So we want to keep it very simple and a very actionable plan. So let's create 2 goals for this week. Very simple. Number 1 goal is you're going to download your freecreditreport.com. Number 2 is you're going to look through the credit report and see if there are any inaccuracies in your credit report. And then you're going to call those 800 numbers if you need to and dispute them. That's actually 3 things, but that we'll call the calling the credit report and disputing as a bonus. All right. But I want to put another bonus in there. If you have a little extra time, what I'd like you to do is start analyzing whether you should pay down your debt on one credit card. If you think you are exceeding the 30% threshold, pay it down. Make a plan. You don't have to pay it all at once, but if you can, make a plan to pay a few extra dollars every couple of weeks, and that'll bring it down to where you want it to be. Now, this is a small step in the right direction, but I want to point out to you that once you take this small step, you know what you've done? You've joined the mass of people, that small group of people actually, who have not only decided to take their credit into their own hands, but you've actually done it. That's right, you've taken steps to repair, to improve the quality of your credit and increase your credit score. And additionally, you have moved yourself one step forward to not only buying a house, but getting a great rate so that you can save tons of money over the next 30 years of having a mortgage. So right now, I want you to hit that download button, download your free checklist. I want you to subscribe if you haven't already. Why? Because we're going to be bringing you this next video and a video after that every week. So you want to get the notification. In fact, there's a notification bell button. Click that too, so that you'll be notified when the next video drops, so we can take you on your journey to buying a house. And then of course, you're going to meet me in the next lesson where we're going to talk to you about your debt to income ratio. How do lenders determine how much house you can afford? We're going to talk about that in our next video, and we're going to get you prepared so that you'll know already before you even go to a lender how much you can afford, and you will be thoroughly prepared. So you'll be thoroughly prepared to look like a dream buyer to any lender. So while you're here, check out our next video. It's right here. And I'll see you in the next video so we get you home ready.